Just draw your attention briefly to our disclaimer. Caledonia Mining is a well-established gold producer in Zimbabwe. We've grown and evolved the company over the last probably 5 to 7 years from a single asset established producer to now a multi-asset business with some very attractive growth prospects. So we've got our established flagship asset, the Blanket Mine, and we've looked after that very well. We've owned it for 17 years and have invested heavily in that, grown production quite significantly. We've acquired several new assets, which now give us a very attractive growth potential, which if we deliver on our production objectives there, will get us up to about 250,000 ounces of production over the next 5 years. We have a long track record of returning value to shareholders. We've been paying a dividend for 12 years. We call it our shareholder retention strategy, but it's very important that for us to continue that view of distributing the value generated by these businesses over time. And we're enormously proud of our social contribution in Zimbabwe. So we're a cornerstone player in the gold market there, and we expect that to continue as we grow the business. So as I said, we have a portfolio of assets which we think are quite nicely spread out over the project maturity profile. So we have a mature producing asset. And when I say mature, the mine is 117 years old. We've owned it for 17 years. It was a Kinross asset before that, so it was pretty well looked after. And we're proud of how we've looked after it ourselves too. So we've doubled production at Blanket since we acquired it, probably quadrupled production. It was producing about 20,000 ounces when we bought it. We then have the Bilboes project, which is effectively a shovel-ready development project. That has a feasibility study completed on it, and we are in the process of reviewing that feasibility study. It's about 2 years old, so obviously there's been some inflationary cost effects. But Bilboes is ready to go. It's a large project. It's 3 million ounces, 2.5 million M&I at a grade of 2.3 grams. So very excited about that, and that has a lot of potential to like I say, take us to 250,000 ounce producer. We then have a M&I resource project with a defined resource that's pretty well understood in Maligreen, but doesn't yet have any feasibility study work done on that. We've got some early stage met testing and as I say, there's about a 900,000 ounce resource there, so that also needs a bit of work. And then we have Motapa, which is, although it's early stage exploration, it's brownfield exploration. It is in a good neighborhood, as I'll show you later. It is contiguous to the Bilboes project, so that could potentially give us some very good extension of life at Bilboes longer term, but we still need to do a bit of drilling work on that. Just to give you a sense of the timeline, so we've over the last 8 years, we've evolved this business quite effectively from a single producing asset, producing about 40,000 ounces a year, with a resource endowment of 2 million ounces. We then expanded that production. We produced 74,000 ounces last year, and 80,000 ounces the year before that. So we've grown this production significantly at our cornerstone asset, as well as then acquired additional projects in 2022. We bought the Bilboes project, and then the Maligreen we've had, I think, in 2021. And so if you look at the business today, we've now got a 6 million ounce gold endowment across the resource base, across the business. And we've doubled the production over the last year. So we're quite proud of the trajectory we're on. And if we continue in terms of funding and growing Bilboes, we'll get our production up quite substantially from here. So Blanket is the cornerstone engine room of the company, with the goose that lays the golden eggs. This is an asset that effectively has made the company since we acquired it in 2006. We've spent from 2015 a huge amount of money and time deepening the infrastructure, building a new shaft from surface, expanding production up to 75 to 80,000 ounces, as well as extending the life of the mine. So we've still got a mine life out to 2034, and the shaft has made a huge difference in terms of enabling us to extend the resource, to keep exploring at depth and producing at depth for many years to come. I'll show you briefly no, there isn't a video. I was expecting a video. Apologies. This is a long section of the mine. This effectively gives you from north to south, running through the mine. That's the scale of that's about 3 kilometers from left to right, which would be north to south, and about 1.5 kilometers total depth. So the new shaft you can see there is to give you schematically a view of the foreshaft is the infrastructure we acquired of Kinross. So you could see that was constrained at a depth of about 750 meters. And this new shaft will take us much deeper, extend the life of the mine, and give us production for many, many years to come. We have been, before we built Central Shaft, we were constrained from an exploration perspective, so we couldn't drill at depth. It was just completely impractical to drill an ore body this deep from surface. So now that Central Shaft is completed, we now have access to deeper areas of the mine, and we're getting very encouraging exploration success. As I said, this mine is over 100 years old, so it's a typical Archean greenstone, goes very deep into the earth. We do not feel resource constrained as a business, and we're quite confident that the mine life will continue to extend, and investors who understand how these deposits, how the mining of these deposits matures over time will understand that. The drilling we've been getting is on the right-hand side of the picture. All of these results you're seeing here are within our current infrastructure. We don't have to invest to go deeper to go after this stuff, but I'll draw your attention to some of those grades. So we're getting double-digit grades in many cases, or double-digit intersections. This is a 3.2 gram ore body total. So to give you a sense of the average there, we've got 6 meters, 5.9 meters at 15.5 grams, 18 meters at 6 grams, 4 meters at almost 9 grams. So this is very encouraging from an exploration point of view, and gives us a high level of confidence that the engine room of the business, which is very important for us as a junior, so that you don't keep depending on the kindness of shareholders to keep sponsoring the business while you develop your other projects, that we expect Blanket to continue for many years to come. We do have some electricity constraints in Southern Africa, as everyone's aware of. So we have invested in a solar project at Blanket. It provides about a quarter of our average electricity, and it provides 100% of our base load daytime demand. So when the sun is shining and the base load mine is running it, we're comfortable to run the mine. And then we have 100% of backup generators as well. It also helps our ESG credentials, and it gives you essentially very, very cheap electricity when the sun is shining. So this helps us enormously, and it's been a good investment. It helps our ESG credentials, and it improves security of supply from an electricity point of view. I just want to speak briefly about Zimbabwe. A lot of people don't really understand what an untapped gold potential there is in this country. This is a place that used to be the third biggest gold producer in Africa. And if we go back about 70 years, used to be about the fifth or sixth biggest gold producer in the world. It's obviously been overtaken in recent years by other countries. So it's fallen down the rankings, but the gold is still there. And that gives us a huge opportunity from our business perspective. And we're very proud of the track record we have in terms of investing against the tide. If you look at the investment we made in Blanket and how successful that has been, we've now acquired Bilboes, which is a 3 million ounce gold project at 2.3 grams and has a very attractive economics, and we acquired that for $65 million. So we have a good track record of investing in Zimbabwe, and we're very confident that trend will continue. So I just want to spend a bit of time looking at the growth projects. As I said, we have a trajectory to get the business to 250,000 ounces with the acquisition of Bilboes, which is a shovel-ready project. These details are all on our website. The feasibility study has been published on CEDAR and is also on our website. So investors can look at the project at their leisure. But to give you some highlights, as I said, it's a 2.5 million ounce M&I resource of 2.3 grams, and then there's another 500,000 ounces of inferred. There's a feasibility study for a 10-year life with total life of mine production of 167,000 ounces a year, but just under 1.7 million ounces total. We're pretty comfortable. There's extension potential here as well. We're in a neighborhood, as you'll see on the next slide, where there's quite a lot of potential to extend the life of this. And the economics are very attractive. We've got some numbers down there of, those numbers look out of date at current gold prices, but you look at the economic returns there at $1,650 gold, and the project had an NPV of $320 million. We are in the process of refreshing this study, and we will not have been immune to the inflationary pressures we've seen in the industry so far. So the capital costs will likely have gone up. We expect there to be some cost inflation, as has affected the rest of the industry, but we're also in a much higher gold price environment now. And we're very comfortable the economics will continue to be compelling. I want to make a point as well that we're in the business here of optimizing NPV per Caledonia share. There are a lot of, unfortunately, our industry has a poor track record of, in very many cases, doubling the size of the business and doubling the number of shares outstanding, and nobody ends up making any money. And that's unfortunately the reputation we've probably earned as an industry, because we've been too profligate with our equity. So we're not really looking at optimizing the NPV of the project here. We're looking at optimizing the NPV of the project for minimal Caledonia dilution, which will give you the greatest NPV per Caledonia share. If that means a slightly smaller project with less dilution, we'll look at that as well. So we've got a range of permutations we're going to look at here. Thankfully, as a 2.3 gram ore body, open pit with a life of mine strip ratio of 7, we're quite comfortable from a grade point of view that this project can carry various permutations, and we'll continue to assess that and make sure we're judicious in terms of capital allocation. I mentioned Motapa as well as the earlier in the project portfolio, but Motapa is quite a key project given that it's contiguous to Bilboes. Essentially, they're part of the same ore body. It just hasn't had the exploration attention that Bilboes has had over the last 20 years in terms of people, the previous owners of Bilboes before we bought it. You can see there's 3 historic pits, and then the bottom left-hand corner, you can see under the Motapa claim area, just under the M Motapa, you see an old heap leach and an old tailings dump. So this is produced historic gold, mainly oxide production. And we do have a lot of historical data there, none of which is compliant from a 43-101 basis, so we can't share it with investors. But we're very confident that this will be a feeder source of ore for the next to extend the life of Bilboes. And our view is that this is potentially as big as Bilboes. Again, we'll find out when we drill it, and we've got a lot of work to do on this. But we're very confident that there's going to be mining activity over this whole complex. And if we're right about this, this is a 6 million ounce gold project. You've got 3 million to the north there in this Motapa area we're very excited about. I also mentioned Maligreen. It's a good project. It's not as attractive as Bilboes, and it's strategically not as well placed as Motapa. We acquired it in order before we got Bilboes. It's still an attractive project for us. We're considering options as to how to get some value for investors out of this, but it's not going to be developed before Bilboes. But it's a 900,000 ounce deposit at a grade of 1.7 with quite attractive grade tonnage dynamics. So there is potentially a high grade section of this which we could look at as well. But this will be the third cab off the rank from a capital allocation perspective. I mentioned ESG. We're enormously proud of our social contribution in Zimbabwe. We have at our mine in the Blanket mine, we have no expats. We employ 2,000 people, all of them local Zimbabweans. We have very good relations with the workers in the community. The workers own 10% of the mine. The community own 10% of the mine. You can see there our general manager, top right-hand corner, handing over a dividend check to the community. We make a very positive contribution to the environment in Zimbabwe and to the community. We're a large taxpayer. We're the biggest gold producer in the country, it's a trend we expect to continue. Obviously, Zimbabwe is economically in a difficult spot, and so the investment is welcome. But it continues to be a high focus of ours to be a good neighbour, and we've achieved that status. We have a good reputation, in all modesty, in the country. So the outlook is we have the engine room of the business is in pretty good shape, and will stay producing stable cash flows for many years. We will complete the feasibility study at Bilboes and look to progress these new assets and figure out the optimal way to finance those. We'll continue to invest in the growth company, like I say, to optimize return for shareholders rather than to optimize NPV and project value. We're looking clearly at optimizing value per share. And in a few years' time, we'll be a multi-asset producer in Zimbabwe. So thank you very much.